Greetings, market rebels. Welcome to this week's sector situation video. I'm Wayne. It is not May 5th, but we normally put these out on Sunday, so we keep our convention that way typically. Excuse me. It is about 2 minutes before the bell here on Friday, May 3rd on the East Coast. So we're about to have some nice gaps higher, and we just covered that in macro measure. And so let me just get through a couple slides here. Our trusty disclaimer, and then we've got our trusty intellectual property rights notice, and then I'm just going to flash this briefly. So a lot of comments will carry over, but the real major thing is that I'm traveling mostly all weekend. Do go to the 2x on speed because of me being me. At this point, I'm just saying, wait, we're betwixt in between basically support and resistance, but I did think even coming into the opening, bulls were having a pretty good week. We had an idea we entered in alongside an IWM as a result of that. And just the way that everything shook out with Powell's double talk, the whole rest of it, it seemed like the bulls were gathering strength and getting the upper hand. So I'm going to leave that there. I think it's been up there long enough. You can always check it out in the macro measure video as well. Let's stop the share and reposition everything, and then we'll get underway. And this will not be a very long sector situation, which I'm sure a lot of people will appreciate, but got to get a lot of stuff rolling here and got to get on the road. And my colleagues are going to be covering some things for me today because I've got a lot happening in terms of travel this weekend. But then there's the bell. The quick take I would have right just on our grid of 12 is that it's mostly good things going on. Even sectors that didn't rally, like XLE, I mean, we showed in macro measure the oil futures were off, and so is XLE. And I think this is good for consumers, right? And when you look at the interest rates coming down, TNX has rolled over hard the past few sessions. The dollar's rolling over hard. The VIX is getting smashed. These are good signs. This was before, right? I was thinking things were looking good before this, but now they're looking really good. And it's all about, can the bulls hold on to today's gains? Will some of the gamma issues on expiration day affect things? Are dealers short and they're going to have to scramble? Are we going to see weakness that will turn into more because that'll create gamma effects that will drive us back down towards a gap close? I don't know that. I won't know that right by the time I finish this video, obviously. So that's a problem for me, but I'll do the best I can. I just think that if we look at this, we have a situation where most sectors have stabilized and most sectors have put in a higher low, right? And so that is usually a pretty good sign. And I think with the interest rate story with the Powell, I'll just leave it at that. Powell's about face, whatever you want to call it. That certainly bodes well, right, for stocks. And we also talked about recently about Yellen getting her troll hands on another $1 trillion and how that usually finds its way into the equity markets. We talked about this year being a good year, typically the second best of the 4 years. We talked about that we did have enough damage a few weeks ago, technically, that we felt like a rally was not illegitimate, right? That couldn't happen, shouldn't happen. It sort of suggested, I think, that it's probably due, and we got one. And so far, they're extending it, and they're kind of maybe ending the week with one of my favorite words. They're ending the week with some gusto, right? Because they're just powering as of right now. They're going to close this thing. If they close now, we'd be near the highest highs of the week on so many things. So, right, a lot of sectors have been like I said, stabilizing, putting in higher lows. Not much is overbought, with the exception of sleepy old utilities. But as I shared in the macro measure video, one thing that hadn't occurred to me, because I'm just not dialed in enough to news and even the time to think about things, is that the AI demand for electricity combined with the crypto demand for electricity, combined, I guess, with EV demand for electricity, maybe it's just business is booming if you're a monopoly, if you're that provides electrical power. So there you go. That might be one of the reasons, and so that might be a good sign. Maybe rates go up a little bit for consumers because of demand, whatever. But reality is that that's probably not a bad thing in terms of what that suggests. But it's not perfect out there, right? A lot of things haven't really um, gone gangbusters. We're not out of the woods yet, but overall, right, you can see just like last week, there's a lot of mid-ish or middling RSI readings. So that means you can go either in either direction without having to worry about overboughtness or oversoldness. So there's plenty of potential for a move to be made before you really start to worry even a little bit about overbought or oversold. I'm thinking at this point, right, the only thing that would really change my mind is if this market had a complete reversal today. Why it would do that, I don't know. Just given, right, that interest rates are really off in a big way. So they've got rates just getting hammered. I think the TNX is off by nearly 1.6% on my charts right now, and they were off significantly the prior two sessions, right? So it's really come off hard. So that's a pretty good sign. So let me see if I can dig up anything that's worth commenting on. I did look at these charts, but I'm going to go back again to, I think it'll be this one. It'll give us the look on what we want for on the sectors. I'll switch over to that. Let me just get my sectors up. I'm having a little trouble, I think, because I'm running I'm running Zoom, and my machine is not liking it with all the activity that's going on in this market right now. So we'll do the best we can if it lets me. Let's see here. Come on. It won't let me get rid of NVIDIA on this chart, or then maybe it will now. So let's take a look at XLE to get started. And I might have to go back and, wow, this might have to be a really just kind of pick out the ones I thought were interesting, and that's about it, because I feel like I'm really hitting bad lag and I could get a crash here. But look, this coming off to me, something I would highlight, is not a bad thing, right? That I don't think, and clearly if you're long energy, it is, but otherwise, consumer-wise, that is not a bad little sign right there. And I do think another thing is that the XTN, this one has had me worried. And if this trend line transfers over, we are getting through resistance, maybe. Let's see if it comes. Yep, it does. So even though, right, you've been down trending, you're getting through the resistance line that we've been working with. So that is at least the start of something. So I would be glad to see this thing start to improve. That's been one of my problems, kind of canaries in the coal mine, that things have not been looking so rosy in transport land. And that, I don't know, like in this day and age, how that can be viewed positively. But there's a lot of, I guess, a lot of arguments that could be made here or there on that one. But I still think it's an important area. And this to me is a good sign if it can start turning the corner, right? So I think that's definitely a good development. The former leaders that we had in the space of XLK, these have been a little bit disappointing. What was that all about, that alarm? Sorry about that, by the way. I don't know what caused that to happen. Let me get to XLK here. We've got XLK, but this, right, this, much like I showed in macro measure, the XLK, my worry is that they close the gap and we just sell off all the way back down to there. If that were to happen today, I would be changing my tune. I'd be a little more worried, probably a lot more worried, because I think the market has what it needs to rally and hold, right? All the bulls really need to do is sort of kneel for the last few snaps of the game, and they've got a nice victory of a week here. And with rates coming, with rates dropping, with Powell being Powell, the whole works, they really should be able to do this, in my opinion. But again, you don't know what is happening with the internal plumbing. You don't know what's going on with gamma. You just don't know where all the open interest is. I don't have all that at my disposal right now. But that to me, right, with that higher low put in and only the 50 SMA, that sector is really close to having a much better profile. And I think it's really close to flipping from being a little bit mixed to bearish to a little bit mixed to bullish. And I think I'd be more inclined to give the bulls the benefit of the doubt than the bears. And I think we've been more inclined to give bears the benefit of the doubt in the intermediate term trend, because look at it, you can see it here on XLC. But another really important sector, despite what happened with Meta, I guess Google helped out a little bit there, but this is really close to getting above the 50 and the 20. And again, that with a higher low, bouncing off a clearly uptrending support level in the form of the 100 SMA. These are good things. So I think that's pretty good as well. Even sectors that are just defy logic, at least my poor logic, XLRE, right? This is looking better, right? Obviously, this interest rate situation is going to, if it really has turned, if that really has shifted, that's going to really help that situation. And so the defensive names are not, I'm not going to look at them, but XLV, XLP, they're not looking really all that great. And there is a little bit of hope, I think, in XLY, the discretionary, because it's got this nice little sort of bullish push that it had leading into the start of this week. Then that ended heading into Powell, but that's reversed since Powell. So here's the demarcation line, right? Here's to the left is before Powell, to the right is after Powell, right? So you can see the difference, and you'll be right above the 50, the last of the SMAs, excuse me. And all you need to do is really overtake this high. You get another higher high. You've got higher lows. And so the shift is very close to happening. That's why I'm saying this is probably a really good example of it. That's why I'm saying you're really close with just a little more bullish behavior. I will start being more inclined to give bulls the benefit of the doubt than I have been. I've been more inclined to give bears the benefit of the doubt. Of course, every stock is different. I've been doing bulls and bears in UOA Pro because the paper's been that way, and it's been a little bit of a stock picker's market, albeit one where I think you'll be happy with singles and doubles rather than big scores, unless you got lucky or you were just the earnings master with research. But other than that, it's been pretty hard. But overall, I mean, I think that's a good sign. So XTN, as we saw, taking out that resistance, XLY on the cusp, these I think are good signs. And, for the consumer a little bit. And I did note in Macro Measure that globally, right, Powell's ready to flush whatever credibility he still had left in the eyes of some people, I guess. And he's ready to flush that. But that might help here domestically, sooner rather than later, but probably later, in my opinion. It won't really, if you come off small in interest rates, I don't see how that instantly energizes everything. They need to come down a lot, I think, for things to really chug. But it still would be a step in the right direction in terms of economic stimulus, and hopefully the inflation situation, it might have been upticking, but hopefully it doesn't continue to. I don't know where the things stand on that. Last I saw, some people were still saying there's a little more uptick to come, but that might be it. So maybe that's also what the market's anticipating. I don't know. But I think these are good signs that we're seeing here. And I'm not going to go against that, right? And the key leadership area, I think, remains really, we know it's NVIDIA SMH, and that looks pretty good, right? And it's not about levels. I'm not going to go through that, especially kind of in this shortened week and with everything fighting me here. Thinkorswim's fighting me with percentages. I've got Zoom crushing me, Windows crushing me. No one likes these tech gremlins do not like me. But let's see. I wanted to get off of, oh, price axis. I wanted to get off of percent. If it can just do that for just this one brief shining moment, that would be great. So look, I think you've got the higher low here in SMH. You know, again, you've got communications, you've got general tech, XLK, your key space, which has had a really nice corrective phase. And now it looks like it's embarking on maybe taking a run at the key resistance, which would be, right? I think this would be your 50 there in gold. That's going to dovetail with our resistance line. And that's also the 50% retracement of the whole down move. So that would be really a victory to get through there and hold, right, in a lot of different ways. And so that could really embolden things. And remember, I did mean to mention, I think I mentioned this in macro measure, but just in case, you know, I think this is another part of sort of the event skeleton that these guys use to drape the price action on. And you know, the video, well, it's not showing here though, is it? For some reason. Why is that not showing the EPS? So I have to bring a little more time in. Maybe I have to bring a little more time. Oh, there it is. Yep. So let's get the date on that. Looks like it's about 522, right? So you're really, when we come back, you're just, as I said in macro measure, you're just going to be a few weeks away, roughly speaking, from 522 after market. So on 5/5, you know, we'll be what you'll be what am I thinking here? It'll be 17. Why am I thinking this? I don't know what I'm thinking right there. I'm starting to get my Greeks messed up with my dates. But yeah, you're only looking at what the 5th gets us to the 12th and then another 10. So yeah, uh you're looking at about 20. Oh, I'm sorry. What am I thinking here? 17 days. I don't know why I'm having such a struggle with that. So like I said, 2 to 3 weeks. I've got too much going on, I think. But anyway, this looks good. I mean, I think I said it sort of last week, and NVIDIA threw us the nice curveball, you know, kind of like the false breakout, which again, I always warn about. But look, this looks like it's ready to try to really close to taking out these highs, right? And so I've looked at it, and when you get stocks that are like this, they do tend to rally in front of earnings. I'm all about, right, if this market keeps this posture, if we see UOA, you know, I'm going to be happy to put that in if it hasn't rallied too far too fast by then, if we do see some. But because I think these charts look good, I think this is working its way past this corrective phase. Just all it needs to do is a little bit more work and hold, and it should be able to try to, right, maybe make a run towards the all-time high, maybe. But I do think that's what it looks good. So I'm going to kind of end it on that, because I think, right, the key parts of everything are looking good. Some sectors are still a little messy, but they've held on. They put in higher lows. They haven't fallen. Key things like discretionary and transports have perked up. And then I'll just show this, even though it's not really the focus of this video, but under the surface of this market, this is what I was looking for. Under the surface of the market, the market breadth measures, there's a lot of simple market breadth measures that are on this particular review, and they're telling me that things are legitimately improving. It's not as if they're just moving up a few names here and there, and that's it. And that accounts for this whole sort of turnaround or improvement that we've seen from the lows a couple of weeks ago. I think it's legitimized, right? I don't think there's anything you might say, well, it could be better. You could. I wouldn't even disagree with that. It's just that it hasn't been a complete farce, which we've seen in the past, where these guys just use literally just a few names that are heavy weights in the major index ETFs, and they leave the rest of the market behind and just move the whole thing up that way. And that isn't really something that a lot of people like to see in terms of staying power. But this is not the case as far as I can tell. So I think with rates really taking it on the chin after the Powell pivot, and the way that a lot of these key sectors that are shaping up, that once we highlighted, to me, right, you're looking pretty good. And remember, I did cover it in macro, but copper is being bid. So the world itself apparently is stabilizing and maybe slightly improving. So even if the U.S. is out of sync with the world, that's probably a good sign for everybody, including the U.S. And remember, this is the second best of the 4 years of the presidential election cycle. And we do know that the powers that be, regardless of the administration and who's in control, excuse me, they love to right, paint the rosiest picture possible. And they've got an extra $1 trillion as of this week, from what we can tell, to do that with. And that money usually finds its way into the market somehow. A lot of it does. So anyway, that's the take. I don't see a lot wrong here. I think the big caveat to my comments here, obviously doing this in the morning, would just be if they find a way to trash this market. I'd be more worried than I had been, because that really wouldn't make any sense to me in terms of, well, why would they, with everything going their way, why in the heck are they selling the hell out of this market? That would almost, scare me a little bit, because I just don't, that would tell me that there's probably something lurking, if that were to happen. It could be attributed to gamma exposure, massive open interest, things like that. And I'd have to look into that. And I'd have to see if there's stories on that, if that were to be really the reason for it. But without, save for that or any kind of geopolitical event or something that would justify routing this market today, I'd be really surprised if that just kind of happened on its own without any other factors that would explain it. It would sort of just be, no, they had an opportunity to liquidate, and they did it with malice, because they took the market all the way back down again. Again, that would really surprise me. I don't see the way these charts are shaping up. And the way this week's news has played out, I don't see why that would happen. But again, could be famous last words. So it'll teach me to have to travel, right? If that turns out to be the case, and I don't have the benefit of the closing data to work with. So on that note, I'm going to end things. I'm going to wish everyone a great weekend. Or if you listen to this or watch it late in the week, and I hope you had a great one. I hope you had a good week. I think if we close here, we're looking good. Hopefully we can get back to more of a nice rally phase where they come in for things. A lot of people find it easier to trade in that direction. I would be cheering on the market, and I hope the economy stays nice and intact myself. I feel like there's still a lot of problems out there, but maybe the international situation really is improving things. So thanks for tuning in. Wish everyone the best, and I'll see you all next week. Thanks again.